Dinshaw Irani joins us. What should one imagine? Where are markets headed now?
Well, Nikhil, you said it very beautifully that when the markets reacts, basically it's positive news honored very well by the markets, and the negative news is also gulped up by the market. So basically, that's how it is. I think the markets are tired of seeing corrections. In fact, I was just looking at the data points which my analyst came up with on Monday because we were also panicking that day. And we looked at the correction from top to bottom. So the index, the Nifty 50 had corrected some 13%. The median correction, however, within the stocks was 19%, which is not too different from the index. But once we looked at the 500, the NSE 500, the median, the actual correction was something like, I think 17%, and sorry, 15% from the peak to bottom. And the median correction was almost 30% in the stocks. So it's obvious that some of the stocks would have collapsed 50, 55% kinds. So it's obvious that there was a lot of panic happening. And frankly, the large caps, look at the fact that after the 13% odd correction, you're already looking at 18, 18.5 kinds of forward earnings for that bunch. So it was obvious that things are looking too bad. The panic was on the street at that point in time.
You've been talking about financials so much so that Helios has launched a banking fund. And now banks have started outperforming. For somebody who's watching the show and now that knows that you will be coming to office tomorrow also, but if they want to know that beyond that, is it time now to, let's say, start a SIP in only banks? As in, like, start a bank Nifty or dedicated SIP for banks only?
So basically, Nico, if you remember, the rally started with that one single statement from RBI saying that, look, I'm biting the bullet. I'm going to infuse liquidity. I don't care about the rupee. I'm going to, in fact, buy dollars and throw in the liquidity of rupees as such. And that's how. So that came on Monday evening. And since then, the sector has, if anything, has done fairly well from that level onwards, because that was what was constraining the sector, the liquidity, the way it had been sucked out of the system to manage inflation and the currency. I think that was too overdone by the central bank. And I think finally they came up and said, okay, fine, let's do this. So I think now from here onwards, in fact, we've seen this in other markets also. Whenever the economies are picking up, these are the sectors which do very well. The lenders and as well as the non-lenders. And within the lenders, we are very comfortable with the consumer banks. They're also selectively, though, because some of the consumer banks have gone into microfinance and massively overboard on unsecured lending. So there we are cautious. But the banks with good franchises, that we are very comfortable with. And coming to the non-lenders part, I think the ones, as we keep calling the gatekeepers to wealth, which is your exchanges or the RTAs, or for that matter, they'll have blips in between. But I think that sector is going to do very well. So I agree with you. I think this is the way to go about. In fact, these are the times when the SIPs can really generate positive alpha going forward. Massive positive alpha going forward. So I think you're right in saying that, Nikunj, this is the time to get into a financial services sector focused fund.